Hey everybody, good morning. My name is Pete. Welcome to a new episode of today's Best Stock Picks. Today we have an interesting day. The market got a wake-up call yesterday with that two-day rally that the SPY and the rest of the market had offered so much hope. The market went well bid. A lot of stocks went well bid. Closed near the highs and looked like we were ready to bounce back above what was a box. And we'll take a look at what that box means in the SPY in a minute. But what a wake-up call. Technically speaking, it was a perfect breakdown where we had a two-day rally after support broke, rallied back up to that support. Support held, and the market got crushed. Quite a few stocks did the same. Really a good lesson, quite honestly. The trading and the price action that we had during July really lulled a lot of people into a false sense of confidence where if you heard it and you watched it and you were in the channel with me here, you heard me saying a lot of people are going to get steamrolled because they think the market can only go up. They think the market's always going to bail them out. Well, I have 20 years experience. I knew that was not the case. It's never been the case. There has been pockets of opportunity where stimulus packages and that kind of stuff have propped the market up. But ultimately, the market is going to do what it's going to do. And right now, for those of you that were out of stop loss, I feel sorry for you right now, especially if you're trading Tesla and some of those other stocks that rolled over hard. But you know what? Look, I tell everybody in the boot camp, when something happens in the market that is a loss, mentally shift yourself over to say that this is a really expensive seminar that I just paid for. And I always use the name of the stock. So let's just say, for argument's sake, we're talking about Facebook. For no reason, just let's say Facebook. Let's say Facebook, I made a trade and it was a dumb trade or a bad trade or a bad idea, and I lost money on the trade. I always reshift that in my mind because I want to get back to positive thinking. I want to get back to thinking the right way. I want to get back to how do I fix this right away? What is the solution? What should I do next time? So again, let's just use Facebook as an example, and I'll just throw a number out there. Let's say I lost $1,000 on a bad trade. I'll say, wow, that was an expensive $1,000 Facebook seminar I went to yesterday. Let's reshift that and make sure we take the lessons with us into today's market. So what do we have going on today? Today we have something very interesting, which is we're finally getting to the point where we have trades on both sides of the market. For the longest time, it was long only, bull only, just look for the whole list was longs. We weren't even looking at the other side because there really wasn't any reason to. This is a normal market. This is what normally happens where you go into the day where you have longs on your list, you have shorts on your list, and then as the market unfolds, you have good ideas. And as the week unfolds, quite honestly, if you're swing trading. So we're going to head over to the charts. We're going to take a look at what I meant there in the SPY. And if you have any feedback about results that you've gotten, questions about trading, leave a comment below the video. I'd love to hear from you. And definitely subscribe to the channel. That would be awesome too. So let's head on over to the screen. Let's actually take a look at we're going to start out with the SPY first, actually, and then we're going to break it down from there. So you can see over here, this is the price action that I was discussing. We drew this trend line a few weeks ago, basically saying that this is the first potential change of trend, breaking this trend, because the first time it breaks a trend, you now have a new level. You have this level and you have this level, and your stock or market or ETF, whatever you happen to be watching, is now stuck in this box. And until it gets out of that box, you're going to assume it's going to continue. But in this case, it did not. And here's really the area we're looking at. It broke down, rallied back. And if you noticed, I think it was on Monday, I had mentioned that the first time any security really breaks down after a sustained uptrend, in this case, the first breakdown generally fails. And that's actually what we saw here. We saw the push down, a rally, but this is the part that was not conducive to the bulls being happy. Let's just put it that way, where the resistance held just absolutely perfectly. It was support, now it's resistance, and the market got crushed. Now, I want to say this, like we're not just shorting with reckless abandon, because the market has, for whatever reason you want to put on it, has rallied since March. However, if we look at the weekly charts, we are now starting to see crackdowns. We're starting to see 3 solid weeks, and this week's not over yet, so that's why I'm not saying 4 weeks, where the SPY ETF is now closed below the opening price, and it looks like that's going to happen again here unless we have a nice 2-day rally, which means that they're selling there's consistent selling over weeks now, which means that you need to adapt how you're trading, which means that you need trades on both sides of the market. So we're going to start out with some stock picks today. We're going to start out with Costco. Costco actually has earnings after the close today. So Costco is a good example here that we're actually kind of stuck in a box. And I would say it's really 336 to 348. It's been very challenging to hold through earnings this year. It's been super hit or miss. Good stocks reporting good earnings, selling off. Stocks that have reported earnings like Target and CRM, where they've given us a really good tradable opportunity that day and then go sideways for a month. It's been challenging. We found that the easier trades have been after earnings and looking for follow through. I think work recently has been a good example of that. But I think more specifically Lulu, where it was actually trading at or near all-time highs, had earnings, and then the next week or so was a pretty good short sale. Bounced recently, but a pretty good short sale. So we're looking for the same at Costco. We're not looking to predict. I don't want to get into that analysis. We could be here all day for that kind of stuff. But really, we had a good bounce, but now we're still stuck in this box. So we're looking for Costco to come out with earnings today, and then we're going to hop on board the guidance going forward, which has been a pretty reliable play. Going forward, also Nike, which had just blowout earnings and exploded today. I'm going to be talking about longs first, and then I'm going to be talking about shorts after that. So Nike, we're actually still looking for a long, actually setting up really well today. The lower close, profit-taking, selling off with the rest of the market, but closing off of the low. So we're actually looking for Nike to form a double bottom intraday or test yesterday's low, looking for that to initiate a new trade long. WDC actually finally broke this resistance level that we've been watching, and it looked like it was really gearing up for a nice run at a minimum of 42, maybe 46. This is at the top of my list today because it did show relative strength yesterday, broke through the resistance, traded lower with everything else, but still kind of eked its way above the opening range and stayed there. Twitter is another interesting one. We have to go back a little further here. That you can see Twitter actually hit our target right out of the gate 2 days. Give full credit to Mike and the community and the boot camp for calling this trade out. And again, that's a big part of being in the community. Other members of the community are feeding ideas into each other. And once you understand the strategy that we teach in the boot camp of order flow and tape reading, then you start to trust everybody's ideas, and we really amplify the amount of ideas. And Mike called this one out. A lot of people in the community took advantage of it. Hit the target now, though. I like this a little bit better over 46. So it'd be something I would day trade today, but I wouldn't look to initiate a new swing trade until it closes on the daily chart above 46. Workhorse is actually one of my more aggressive trades today. We are looking at the stock pulling off of all-time highs, closing on the lows now 2 days in a row. This is what I technically call a saturation play, and I'd be looking for this to push lower. So open higher, push lower in this case because it's already trading higher. I'm looking for the higher opening to push low, give me an entry signal, and then initiate a new swing trade long. I like this one a lot today, actually. APPS is another one. Excuse me, losing my voice. Really solid relative strength up here, and you can see that the stock had a nice momentum pause after this push to the upside. Above 32, 33 is the trade right here. It's going to open up a little bit lower. I still like the stock long. The relative strength compared to the rest of the market selling off, that alone should have the stock in your watch list. So I don't care that it's actually opening lower. The trade still sits. GSX actually setting up as a beautiful swing trade, looking for it to retest 130. Look at the stock, has a nice push here, holding while the market's getting pummeled, basically. A few indecision candles here, but that's okay. You want to see that during a pause. The trade here, if you're not long the stock already, would be above 106, looking for 130. It's a really healthy profit target here. And net actually has been out of our list. We were trading it pretty actively during the summer, but I don't know why that line is crooked. We are looking for a breakout here that we kind of kissed yesterday. Indecision at this level. We're looking for this over 40, a tight target of 43 and a better trade over that. Now on the short side, we're going to big up a big list here. We're going to look at stocks that made new 20-day lows, stocks that have room to go. And if you're comfortable with short selling, there's some opportunity out there. You just got to be careful not short selling into a stock that's pulling into support. You want to make sure it has room to go. The interesting setup here in PAS is it's one of our favorite setups for those of you that are in the boot camp, especially inside candlestick breakdown leading to a new move to the downside. PSX as well. You can see really clean move here. Maybe a little bit of support where we are, but then the next level is 40. So you're going to notice a lot of these short sales are in the energy sector. And again, they're at support, minor support one time here, but you need to see it break through there and has plenty of room to go. The financials, Citigroup especially, broke down before the rest of the financials, but now we're starting to see a few more rollovers. So we have Citigroup. Goldman Sachs had a very, I don't know if I'd say vicious, but a pretty strong move to the downside yesterday. A higher opening in a short sale, a higher opening in bearish order flow is a short sale. So it's bid $2 higher right now, but I'm still looking for a short sale in this stock. But again, you don't just short sale in the open because it's in your list. You need to match that criteria to what means a short sale to you. For us, that at a minimum would be the opening price and the opening range. Then we have CVX. Man, some serious breakdowns and some room to go here. Also XOM. XOM. See, that has room to go as well. Ciena, CIEN, and Boeing, which, look, I keep talking about this stock, and you can see why I've been a little frustrated with it. It goes into this consolidation, breaks down a little bit, and then explodes, goes into this consolidation, breaks down a little bit, and rallies. This is an interesting one. If it finally breaks this support here at 150, 151, it's got some room to go down to 120. I love trading the stock. It just hasn't been very obvious. Look, I don't want to see stocks go down. I understand that's not good, but I'm a trader, and if stocks are going down, I'm going to hit the bid and I'm going to short these stocks. So a lot to look at on both sides of the market. If you're a little frustrated right now, if you're a little out of sorts with all of a sudden you have to watch both sides of the market, I'd strongly suggest two things. Number one would be join the boot camp. It is a 30-day seminar where you learn everything you need to know to handle both sides of the market. Plus, you get my exact entry and exit signals. We have great conversations during the day that really accelerate your learning curve. Number two is absolutely narrow your list. It's very difficult for a new trader or somebody who feels a little overwhelmed to have a bigger list and feel like you're in control. If you want to feel like you're in control, have a few stocks on the long side, a few stocks on the short side. If they unfold, perfect. Trade them aggressively. If they don't, there's nothing wrong with sitting back and preserving precious capital while the market's in this potential change of trend and the whole tone of the market is potentially changing. So do yourself a favor and be smart. If you're a little confused, preserve that capital and learn from the change of the environment. If you are okay with it, have a good definitive list and don't trade out of that list. Just trade that list and look for your best opportunities. If you have any questions, absolutely leave me some feedback below, and I look forward to hearing from you. Have a great day.